Hey Young, this is Ryan with TrendLizard.com. Thanks for sending me the email requesting the two tickers, and thanks for signing up at TrendLizard.com. It's much appreciated, and welcome to our community. I think you're going to like it here. I want to take a look at the two stocks that you sent to me. They are RCL, which is the Royal Caribbean Cruise Line, and SAVE, which is Spirit Airlines. You indicated in your email that these are two kind of corona virus type plays because both have been crushed over the course of 2020 during the coronavirus crash, and both are on the recovery, but of course have not yet fully recovered by any means. So I'm going to take a look at both. Let's start with RCL. Here it is. This is its long-term view. It was incepted back in 1993. From there, it gave us a really nice trendy five-wave advance up into the 2000 high, at which point it pulled back and gave us a very large but clearly counter-trend three-wave move into the 2009 low. From there, it embarked on a nice five-wave advance into the 2018 high. It chopped around for a little bit and then, of course, got wrecked in 2020 before the recovery that's taking place currently. So everything we see on a very long-term time frame is bullish in that up moves are trendy five-wave moves and pullbacks are counter-trend three-wave moves. So that is bullish. Now, the question that we have to ask ourselves is the pullback off the 2018 high a counter-trend move, and is it over? If so, then you could look for another trendy five-wave advance to occur off the 2020 low. Of course, if there's a reason to think that it's not over, then we'll know that this pullback off the 2018 high is not yet complete. So that is kind of what's at stake here. Let's dive in a little bit more and look at this pullback off the 2018 high. This is it. This was the high recorded back in early 2018. This is a promising start. What we see is a very nice three-wave pullback off of that high into the late 2018 low, before another recovery back to the high occurred, and then a C-wave down. So this looks like a counter-trend move. You can see that it looks like a three-wave move into the 2020 high. That is a bullish thing in that the pullback again off that 2018 high looks like a counter-trend move. However, if we take a little bit of a closer look at what has happened off the 2020 low, what we find is that too looks like a counter trend move. You can see the advance off March's low, spike up, spike down, spike all over the place, and then an up move. Generally speaking, the overall form of this recovery off of March's low looks like a three-wave counter trend move. Very hard to find another way to label this. And if I do try to label it a different way, suddenly I'm not being true to the charts. All I'm trying to do is justify a way for you to buy this when I don't think we can. Because, again, this move looks like a counter-trend three-wave move off of March's low. I'm seeing the same thing with a lot of airlines and things like that. It looks like a counter-trend move off of March's low. Now, that doesn't mean the recovery is over. There still could be a buying opportunity depending on your time frame. What appears to be happening now is off of June's high, we appear to be in a B-wave down, blue B-wave down, and once that move completes, we would look for another C-wave up back to June's high, potentially above as high as 90. That C-wave advance could go, but I don't think it's going to start yet. Again, we're looking for a down move to complete this B-wave. It's going to go below June's low. We're looking for something to the downside. Once you see a spike lower, then that's going to be the opportunity to buy RCL if you're looking on maybe a midterm play looking for that next C-wave advance. I wouldn't buy it now. What's happened off of June's low is counter-trend sideways choppy movement, a pretty clear indication that this pullback off of June's high is not yet complete. So again, we're looking for a pullback to complete the B-wave before a C-wave up takes place to complete this counter-trend recovery off of March's low. If we put that into the context of the overall pattern, probably what that means is we're getting an A wave down. We're currently in a B wave up right now, and then a C wave down will bring us back to that 2020 low at some point. So it does look like a pretty respectable move on the midterm after this B wave pullback completes off June's high. From there, you can trade the C wave up, but just keep it in the right context. Doesn't look like it's the long-term play. It looks more like a midterm play that you can buy once you get a spike down from here. So there is Royal Caribbean. Let's move on to SAVE, S-A-V-E, which is Spirit Airlines. This is another guy that, of course, got destroyed in 2020. So many things did. But here's my take. It was incepted back in 2011. Had a nice advance from that point. I think basically this is the end of a five-wave advance. It's hard to tell. Just because a stock was incepted at a certain point doesn't mean it's going to start a brand new five-wave up move from that point. Point being, it looks like it's the end of a 5-wave up move. From there, you had a big pullback, so it's not like the pullback started in 2020 or even in 2019. It actually started way back in 2014, at which point it was trading at 85. So even before the coronavirus crash came, this guy was about 50% lower. But the interesting part is you had that down leg, you had a big multi-year counter-trend B wave, and then you had a crushing C wave decline that has begun. And the question we have to ask ourselves is this C wave down complete? Is it ready now to resume the uptrend after a massive 3-wave move that has played off that 2014 high? There's a couple ways to look at it. We're going to look at it at both ways and come to a conclusion based on the clues that are available to us. So let's go ahead and zoom in on this decline, this more recent decline off the 2018 high. Here it is. There's 2 ways to look at this move. It's clearly a trendy move. There's just no doubting a move that is this sharp is a trendy 5-wave move, and it should be. C waves are trendy moves. So what we see here is a first wave down into the late 2019 high, a second wave bounce. Then you have a very sharp, clear 3rd wave down, and then you have kind of this choppy action that's happened in 2020. So either this is a 4th wave to the upside here, and we will get a 5th wave down back to the 2020 low, or we could look at it a little bit more creatively and come to the conclusion that maybe that 5th wave completed at May's low, and now we're starting something that's more important to the upside after this big decline ended, and that would therefore free up this move to resume the overall uptrend. I don't think that's what's happening, and let me explain why. If we take a look at this recovery off of March's low, actually this might be a better way to do it. It very much looks like a counter trend, a 3-wave move off of March's low, March's low up into March's high, down to May's low, and then up into June's high. This very much looks like a counter trend, a 3-wave move. It feels more creative to call this a 3rd, a 4th, and then a 5th wave that completed. More likely this is part of a counter trend move, which makes me think it's very similar to RCL. It looks like an A wave up. It feels like we're now in a B wave down. This move off of June's high does not appear done. We've had a lot of counter trend movement off of June's low. It looks like a counter trend pullback that's not yet done. So basically we're expecting a breakdown for wave B, at which point you should get a larger C wave up. Now this is a tradable move again. This is a move that you can buy because C waves are sharp. It should be comparable to maybe what happened off of May's low, which was a huge move. So that looks like a buying opportunity. What I don't think it's in a place where this is a long-term buy. I don't believe that this C wave down that began back in 2019 is over. I believe that we're in a 4th wave right now that's not complete. You should get another big up leg that should be tradable, at which point you're going to get a 5th wave down back to the lows. That's the objective take on all of this. So that's what we're looking at, basically looking for a little bit of a decline to new lows for this pullback before you get a large up leg for wave C. So if you want to trade it on a midterm time frame, I would be looking to buy the next down leg that moves below I guess what is now August low. So that would be your opportunity to look to buy for this C wave up. So I hope that's helpful, Hyung. We do this every day at TrendLizard.com. Looking forward to having you as part of the community, and we'll go from there. So have a great weekend, and we will talk to you soon. Take care.